Now speaking, Mac Livingston, Vice President, Investor Relations. Good morning, everyone. Today, our CEO, Billy Gifford, and CFO, Sal Mancuso, will discuss Altria's Q2 and first half business results. We've issued a press release detailing these results, which, along with our presentation, quarterly metrics, and latest corporate responsibility reports, can be found on our website. We're comparing today's results to the same period in 2022. Please note, our remarks contain forward-looking statements and projections of future results, which are subject to various factors that could cause actual results to differ. Future dividend payments and share repurchases are at the discretion of our board. We'll report our financial results in accordance with U.S. GAAP. We'll present operating results on both a reported and adjusted basis, with adjusted results excluding special items for better comparison. Descriptions and reconciliations of these non-GAAP financial measures are available in our earnings release and on our website. Please note, all references to tobacco consumers or consumers within a specific tobacco category or segment refer to adult tobacco consumers aged 21 or older. Now, I'll hand over to Billy. Now speaking, Billy Gifford, Chief Executive Officer. Good morning, thank you for joining us. We had a solid first half of the year, growing adjusted diluted earnings per share by 5%. We completed our acquisition of NJOY and are focused on accelerating U.S. smoker and vapor adoption of NJOY ACE. We expect to expand distribution to 70,000 stores by the end of the year. Our oral nicotine pouches grew 8.4 share points year over year and now represent 29.1% of the total U.S. oral tobacco category. On! Full tobacco increased 5% sequentially, reaching 70 share points in the second quarter. We are launching on! Plus, a new tobacco-derived nicotine wet pouch product, and expect profitability in 2025. In our core tobacco business, cigarette consumer drawings declined, but Marlboro's quarterly retail share grew to 42.1%. We remain concerned with the negative unintended consequences of prohibitionary policies, such as the California flavor ban, which has led to substantial illicit market activity. We believe the best way to prevent illicit markets is to keep tobacco products legal and regulated, and advocate for a well-regulated U.S. tobacco industry that embraces harm reduction. Now speaking, Sal Mancuso, Chief Financial Officer. Smokable Products segment, adjusted operating company's income grew by 3.1% in Q2 and 1.7% in the first half. Net price realization increased by 10.1% in Q2 and 10.5% in the first half. Marlboro's net pack price increased by 6.1% in Q2. Domestic cigarette volumes declined by 8.7% in Q2 and 10% in the first half. Adjusted for calendar differences and trade inventory movements, volumes declined by an estimated 10% and 10.5% in Q2 and the first half, respectively. Industry-wide, adjusted domestic cigarette volumes declined by 7.5% in Q2 and 8% in the first half. Total discount segment share grew by 1.8 percentage points to 28.2%. Marlboro's retail share of the cigarette category grew by 10% sequentially to 42.1%. Marlboro's menthol share declined due to the California flavor ban and increased competition. Marlboro's share within the premium segment increased to 58.6%. Cigars, shipment volume increased by 5% in the first half. Middleton team expanding Royal to enhance Black & Mild's plastic tip offerings. Oral tobacco products segment, adjusted OCI grew by 3% in Q2 with margins of 68%. Total segment shipment volume decreased by 1.7% in Q2. Oral tobacco products segment retail share declined by 2.8 percentage points in Q2. On! Continued to grow share, while MST brands declined. Investment in Abbey recorded $132 million of adjusted equity earnings in Q2, representing Altria's share of Abbey's Q1 2023 results. Strong balance sheet, debt to EBITDA ratio was 2.2 times at the end of Q2. Received $1.70 billion plus interest from Philip Morris International and repaid term loan for NJOY transaction. Commitment to shareholder value, completed acquisition of NJOY, retired $1.6 billion in long-term notes, paid $3.4 billion in dividends, and repurchased $472 million worth of shares. $528 million remaining under the $1 billion share repurchase program. Q&A session begins. Now speaking, Mac Livingston, Vice President, Investor Relations. We apologize for the audio issues during the call and will expedite the posting of the replay for full access to the remarks. Let's now move on to the Q&A session. Morgan Stanley analyst Pam Kaufman inquired, what is your outlook for the long-term industry volume of the cigarette category? With a decline of 8% in the first half of this year, do you anticipate a return to the mid-single-digit decline rate? What factors would contribute to the normalization of industry volumes towards that level? Billy Gifford replied, in the first quarter, we observed that the COVID pandemic led to an increase in nicotine occasions for adult smokers. However, as mobility increased and the pandemic subsided, we anticipated a decline in these occasions. This decline was further influenced by the cumulative impact of inflation. To gain a better understanding of this situation, we can look back at similar economic pressures on adult tobacco consumers, such as in 2008, 2009, and 2012. Historically, it takes time for consumers to adjust to their new economic circumstances, and we have seen a return to normal nicotine occasions in the past. Currently, although inflation is decreasing on a cumulative basis, it is still growing, which continues to put pressure on consumers. In response to this, in the first quarter, we made additional investments in areas where competitors were offering aggressive menthol products and where consumers were seeking discounts. We are pleased with the results of these investments, as evidenced by the 0.1% quarter-over-quarter increase in Marlboro. Morgan Stanley analyst Pam Kaufman inquired, can you provide more details on the opportunities for operational efficiency within NJOY now that you have owned the business for 2 months? Additionally, how do you anticipate NJOY's contribution in the upcoming quarters and the required investment for the brand? Billy Gifford replied, absolutely. Our main focus moving forward is on our pod-based product, the Ace NJOY. Currently, only 3,000 stores carry all top 3 pod SKUs, while about 10,000 stores carry the pods but not the devices. Our strategy will be centered around filling these distribution gaps and improving visibility. Additionally, we will be working on enhancing Ace's brand equity to increase brand awareness and appeal among adult smokers and vapors. Goldman Sachs analyst Bonnie Herzog inquired, can you please explain the potential factors that could lead to lower end of your EPS growth guidance for the second half of the year? Billy Gifford replied, we are focusing on investing in the NJOY brand to expand distribution and allocate equity spending. The current economy is dynamic, and adult cigarette consumers are facing significant pressures. We aim to be flexible and adapt to their needs. We will monitor the progress of the economy and the return of adult cigarette consumers to a more comfortable economic position. Goldman Sachs analyst Bonnie Herzog inquired, Billy, can you provide an estimate of the increase in investments expected this year compared to last year? Billy Gifford replied, we are focused on strengthening our brand and increasing awareness among adult vapers and direct consumers. This includes enhancing brand equity and expanding distribution to fill gaps and improve visibility in existing stores, as well as entering new stores. Goldman Sachs analyst Bonnie Herzog inquired, can you please provide an update on your strategy for addressing the widening relative price gaps, particularly in light of the actions taken by deep discount manufacturers and the consumer calls you mentioned earlier? How flexible are you with your pricing and promotional strategies, and how do you plan to leverage Marlboro Black to minimize downtrading? Billy Gifford replied, in the second quarter, we made strategic investments in certain areas which resulted in a 0.1% sequential increase in Marlboro. Our RGM tools and advanced analytics enable us to efficiently manage pricing on a national level and make adjustments as needed. Marlboro continues to perform well in the premium segment, and historically, during times of consumer pressure, we have seen discount brands grow initially, followed by a moderation over time. TD Cowen analyst Vivian Azer inquired, can you comment on the expected margins for oral tobacco in the second half of the year, considering the year-over-year improvement in the previous degradation in support of on? Sal Mancuso replied, absolutely, we are extremely pleased with the margin performance in our OTP segment. Year-to-date OTP margins have exceeded 68%, showcasing the success of our on product. We have consistently gained market share each quarter, resulting in a significant 17% increase in pricing compared to the previous year. This clearly demonstrates the strength of on in the marketplace and highlights the overall positive progress of our OTP segment. TD Cowen analyst Vivian Azer inquired, given the heightened competition from premium menthol offerings, do you anticipate extending the presence of Marlboro Black Gold in the market beyond your initial plans? Billy Gifford replied, the addition to our portfolio, Marlboro Black, complements our existing Marlboro Black family and fills a gap in our product lineup. Marlboro Black represents approximately 10% of our overall Marlboro brand. It provides consumers with a safe option during times of economic pressure and helps us maintain a strong mainline brand. Marlboro continues to be the aspirational brand in the cigarette category, and Marlboro Black serves as a landing place for consumers facing economic challenges. We have successfully used similar strategies in the past to shrink the gap to our mainline products over time. Stifel Financial Corporation analyst Matt Smith inquired, can you provide more insight into the impact of increased investment in the cigarette business and the potential for higher sales volume through promotional activity in the current digital environment? Billy Gifford replied, we are focused on optimizing our promotional spend to reach the right consumers who truly need our products. This approach allows us to be more efficient and effective in our marketing efforts. As a result, we have seen growth in our premium Marlboro brand and have made investments to further enhance its performance. This has led to a sequential increase of 0.1% in the second quarter. Additionally, we have been able to achieve price realization in the cigarette space. Stifel Financial Corporation analyst Matt Smith inquired, "Can you provide an update on the current distribution and growth drivers for the on!oral brand in the second half of the year, considering the robust growth despite reduced promotional activity?" Billy Gifford replied, "Our distribution strategy is on track, with the product available in the desired stores. We may consider adding more stores in the future, but for now, we are satisfied with our current distribution. Previously, we faced manufacturing constraints, but we have overcome them and are now able to meet the growing demand. While the concept of our product is not new, it is still relatively new to consumers, which presents an opportunity for continued growth. Once consumers try our product, they tend to enjoy it, driving further adoption. It's important to note that our target audience includes both current dippers and cigarette smokers, as our product offers an alternative to traditional tobacco products." UBS analyst Andrea inquired, "Can you provide some insight into the impact of Marlboro Black Gold and increased promotional activity from new MPAs on the stability of the discount in the U.S. cigarette industry?" Billy Gifford replied, "We have observed that the adult cigarette consumer in the U.S. is facing economic pressure. To address this, we have provided opportunities for them to continue engaging with Marlboro, which is a more cost-effective option compared to them leaving and returning. This strategy has been successful in the past, and the results are evident in the first to second quarter." UBS analyst Andrea inquired, "As you expand your presence in the vaping market with NJOY, illicit products have become a concern. How can you and your peers enhance enforcement efforts to reduce the presence of these products?" Billy Gifford replied, "Continued engagement with Congress and the FDA is crucial to prioritize the issue of underage use of e-vapor. The FDA needs to focus on enforcement against illicit products with unauthorized flavors. The most recent National Youth Tobacco Survey revealed that the most popular product among youth was an illicit one. While the FDA has started stepping up enforcement, it needs to be more vigorous. Publishing a list of authorized products and those under review would help level the playing field and encourage compliance in the marketplace." Barclays analyst Gaurav Jain inquired, "Why are you launching the NJOY Ace instead of the NJOY Daily product, considering the cannibalization of closed and e-cigarettes by disposables? Additionally, could you provide an update on the PMTA application for the next-gen product?" Billy Gifford replied, "In terms of the e-vapor category, we see a significant opportunity in the large pod-based consumer segment. Our NJOY Ace is the only pod that has received FDA authorization, which positions us well in this space. Additionally, we are seeing growth in the disposable segment, particularly with the abundance of illicit flavors in the market. As the FDA increases enforcement and removes these illicit products, we anticipate further growth in the disposable category, where NJOY has also received authorization. However, our primary focus remains on the pod-based consumer base until the illicit flavors are addressed. Regarding the age restriction technology, we recently closed it and are excited about its potential. We are currently assessing the timing for its implementation, with a target in mind by the end of this year. What's particularly exciting is the regulatory expertise brought on board from NJOY, who successfully navigated the regulatory process for their pod-based product. We look forward to following their lead in this area." Barclays analyst Gaurav Jain inquired, "Can you provide an update on the JUUL patent litigation against NJOY? Given your previous association with JUUL, I assumed you would have acquired access to all their intellectual property. Can you clarify the current situation?" Billy Gifford replied, "We strongly believe that the litigation against us lacks merit and we are actively working to address it. It is worth noting that JUUL filed the suit after our acquisition, which raises questions about the timing and motives behind it. From a merit standpoint, it appears to be an attempt to suppress competition from the only pod-based product that the FDA has deemed suitable for public health protection. We remain confident in the strength of our position and view the lawsuit as baseless." Barclays analyst Gaurav Jain inquired, "Will NJOY be launching internationally in addition to Sweden?" Billy Gifford replied, "Our current focus is on filling distribution gaps in existing U.S. stores and expanding distribution to approximately 70,000 stores by year-end. We will provide updates on international plans at the appropriate time." Mac Livingston replied, "Thank you for your question. We appreciate your interest in our company. If you have any further inquiries, please don't hesitate to contact our investor relations team. Have a great day."